progress. Hello, everybody. Welcome to my new weekly review. So, today I will go over the positions that I also was in on Friday and the previous week that weren't closed. So, I put them in the previous week chart. So, the one I took GBAUD was the first one that closed after that upcoming week we had. So, this was on 2.5% netto gain for me. So if I go over the daily, weekly, and 4 hour, if I go over the daily, what can you see on the daily? You had here a nice impulse, correction, impulse, potential correction. You can see it already, impulse A, B, C. And we had here a nice fib completion from this daily, fib from this low to this high. You had here fib completion, and you had here then the bearish W, first leg, second leg, third leg, fourth leg within that. Then also a pattern within a pattern, shoulder one, head, shoulder two, descending trend line, aligning here, holding the price down, and we just could take our limit above this shoulder one wicks here. I put it my stop loss 10 pips, something like that, 15 pips, and then our stop loss would be here. And the trade played out really nicely to the downside till the daily TP. I just took everything out here for around 2.5%. So then on the weekly, what could we see? We had a 2 out of 4 to go for that short. What could you see? We had here a nice selling zone. We were at these weekly highs. These were all sellers. So the supply and demand zone is working for us. We touched it also with the daily shoulder one. And then the candle closed. This red candle was working for you on that supply and demand zone. So I was counting that with me. The trend for me is still bearish against us, sorry. The trend is against us because you had here a low, high, low, high. You have here your first time break. So for me, it's still bullish, yet still here a clear impulse. Then here your potential correction here, potential impulse. So for me, the trend was against us. And the fib from this low here till this high can play against you, the natural M, same highs, same lows. So 2 out of 4 for that long. Then on the 4 hour, what could we see? Just to place our limit here, stop loss above the shoulder one wicks. Then we had stop loss here, and then we went all the way to the downside. So this was that trade. So I will close this. Then the next one was USDCAD. This was actually a break even for me. So if I go over the daily, weekly, and 4 hour, if I go over now the daily, for me it was a clear pattern within a pattern. So we have here shoulder one, head, shoulder two with that nice impulse, and here that correction. You have here also your first leg, second leg, third leg, fourth leg. So bullish M within an inverted and shoulders, which is a pattern within a pattern, and it's aligning with the supply and demand zone here, acting as resistance, resistance, false break, resistance, resistance weak, support weak, potential support, and we triggered from this point a little bit to the upside, and then we triggered again some sellers. So this trade normally would for me a break even, but if I look to my spreadsheet, this was a minus 1.5% because I was letting this trade running through the weekend, and the spreads were coming and the price were a little bit lower, and yeah, that's why I closed it. And yeah, I just needed to close it because I already had a scale in also. So for me, the weekly was a 2 out of 4 for that long. So if I put my horizontal line at this daily zone of interest, we had here clear resistance, support, here support, resistance, support, weak, resistance, support, support, weak, resistance, weak, resistance, support, weak, support. So for me, it's a region where we can react from, and it's a clear supply and demand zone for me. Some people will find it not, but I can see on that daily zone, we have some nice triggering signs with wicks, support, resistance wicks, so like that. So the supply and demand zone is for us, and then the candle closed. This blue candle was projecting nicely to the upside from that weekly supply and demand zone. So candle close is for us. the trend is still bearish because you had here your first leg, second leg, third leg. This is your fourth leg, clear correction. So this is against you, and the fib can also be against you if you take your fib from this high till this low. We just didn't broke this daily, weekly higher low wicks, so it's still in that zone, so we can still go to the downside. So 2 out of 4 for that long. And on the 4 hour, you could see you could just take your limit from that shoulder one here, head shoulder two, and then this major bullish M here that could play out. So you could take your limit here, stop loss below the shoulder one wicks, and then this trade wasn't running break even. So we were running around 0.8% here at the stop of that 4 hour wick. And I was also looking for that scale in, that bullish M. So I placed it Friday, also that scale in. And the thing I needed to do here is when I was looking for that scale in, I just needed to run break even. That was the thing. But I was just letting opening the trade over the weekend, and Monday this trade was around here, a little bit more to the downside with the spread. So yeah, I just closed it because it could go also -2%. So I just needed to go break even if I placed my scale in trade here for that bullish M. So this was a major feedback for myself from the trade. So this trade was a 0.5% loss. And then if I go over the scaling, so this is the scaling on a 4 hour, you can see this was a bullish M, first leg, second leg, third leg, fourth leg. You could also potentially take here the deceleration. I didn't took it there because I wasn't running 1% already. But yeah, I took here the scaling the bullish M here, and this other trade was still running here. So yeah, this was a mistake that I didn't place here my trade here on break even, that first one. Then EURGBP, this was for me a good trade. So this was a -0.2% because of the spreads, and we over the weekend the swaps were raising. So I will go over the daily, weekly, and 4 hour. So these four trades I took previous week that were closing last week. So these four trades I took were from 2 weeks ago, the last Friday, and then previous week it closed. Then what we could see here on the daily chart, you could see we have a pattern in a pattern, shoulder one here, head, shoulder two, first leg, second leg correction, third leg impulse, fourth leg correction, A, B, C correction. We tap the shoulder one here. We could take our limit because for me it's a small pattern in a pattern, and it's a clear supply and demand. So on the daily, nice buyers sitting here, nice wicks, buyers, nice wick, buyers, small resistance wick here, but this is just a false break. Also buyers. So for me it was obvious that the buyers could kick in again to the upside, and we touched the beginning of correction, and now we have some trouble. Potentially we can go back to this zone. So this was a clear trade. And if I go over the weekly, on the weekly you can see we were 3 out of 4. For me that candle close, this last candle close was for me working. Then the fib from this low till this high is in the fib levels, touching nicely the supply and demand zone of that shoulder one here, head, shoulder two, nice buyers kicking in here, here. So the liquidity was taken. So we have a 3 out of 4. And the only thing that was against us was this trend. This one because you had here a high, a low, a high, a new low. So this is a major bearish W. The trend is potentially bearish, and this can be your whole correction for potentially going back to the downside. Who knows what will happen there? And on the 4 hour, this was my limit set, 1 pip to the upside. I run my entry to the upside, and this trade was triggered, and we could go break even for this trade. I went break even around here, and then this trade just took me out here. So it was a shame that this was just a break even. But if I analyzed my mistake, I could just set a limit here instead of rounding off the price because a lot of times the price comes back and goes a little bit lower than your shoulder one for grabbing some new liquidity somewhere because the buy orders needs to kick in. So if I had my trade set here, then this trade would be still running and this could be a 2.5% trade. So this is just feedback for myself. And also I could take potentially a scale in from that bullish M, first leg, second leg, third leg, fourth leg. I could set this trade on break even. I have a better risk reward. I entered at this bullish M here, and then we could go here, take partials or something like that. And then we could look for this next bullish M, first leg, second leg, third leg, fourth leg, and then we were triggered here, and then we could go to the upside. So yeah, this was the last trade I took there. So four trades taken, around 0.2% loss of all these four trades. This could be much better. Then, if I go over my missed trades, there are a lot, eight of them. So the first one, Euro GBP, I will go over it. This one I was explaining is bullish M. So this was the first leg, second leg, third leg, fourth leg. You could take your trade at this 4 hour higher low, stop loss below this 4 hour wick here because this is the liquidity wick for me. So you could have a nice stop loss below this low wick. So for me, it was a nice trade and you could take some, I think here you could go and break even or taking some partials. Yeah, you could go and break even here. The price went back and then it played out. And this could be another scale in here. So this was a scale in, then GBUSD on the daily, weekly, and 4 hour. So if I go over the daily, what could we see on the daily? On the daily, we have a major bullish M. So if I count the legs, this is your low, high, low, higher, high. And this is your major bullish M. Your major bullish M. On the weekly, you can see that also. On the weekly, you can see that this is your bullish M from the daily. So this one, first leg, second leg, third leg, fourth leg. This one. And you can see that we potentially could make a bullish M fake out. We had here our higher low, higher high. We had a close below this higher low. As you can see, we closed below it, but not below this lowest wick. So for me, it was still valid. So a bullish M fake out potentially. And you could take here a deceleration till this previous structure higher low where the sellers can kick in from to take potentially a short here again and potentially again a buy here. So because the trend is still bullish. So these are just major hedges and scale-ins. So the daily is here clear. I wanted to look for the bullish M fake out. So if I go over the weekly, for me the weekly was a 3 out of 4. We had the bullish trend. We had our low, a high, low, a new high. So this is our bullish M here. Or you can look at also like this. This is your first leg, second leg, third leg, fourth leg. This can be also a bullish M. So the trend is bullish. The candle close. This one is not really working for me because we touched here this weekly IC and we rejected from that. So for me, it's a bearish candle that indicates that we can potentially make a shoulder one here, head shoulder two with that impulsive move and going to the downside where we took some new liquidity from that weekly supply and demand zone from, which we did there. So candle close was against us, then the fib from this low to this high is working for you, and the supply and demand zone acting here as resistance, support, resistance, support, resistance, support, support, support. So it's a clear supply and demand zone that can hold the price up, which is a 3 out of 4 for that long. So a clear trade to take, followed by the plan. And on the 4 hour, you could trade here, then the deceleration here very nicely. and you could go to the upside. Some people will see this daily as a first time break. This can also be a first time break trade. If you see this as your first leg, second leg, third leg, then we have a first time break of this previous higher low wick. These are just same. It was just hitting here the same low. So you could trade here your first time break trade and then the diesel would be in place. So this can be also seen as a pullback trade like that. So I will delete them or close the charts there. Then GBAUD is the next one on a daily, weekly, and 4 hour. So if I go over the daily, this was a retrace trade. So if I took my fib from this high here till this low, it was tapping the 61.80 here, and we had a nice fib completion here. If you rounded it off up to the upside, it was just a nice tap. We had a nice daily candle close, full daily candle close, so really nice to see that. We tapped the daily fib completion, and we could go for taking that long because it's followed by our criteria, and we could go to this previous highs where the sellers can kick in from, where the bearish W could play out potentially. So this is a nice trade. Why I didn't took it is because I didn't took the fib from this high till this low, and I didn't saw it back then. So it was just feedback for myself. And if I go to the weekly is a 3 out of 4. The only thing that is against us is that candle close here. The red one is working potentially against us, but we took some new liquidity because that candle close was bearish. We took new liquidity, we went lower, and we tapped that major supply and demand zone here, acting as resistance, support weak, resistance weak, resistance weak, support weak, resistance, support very nicely. And the trend is bullish. We have here that first leg, second leg, third leg, fourth leg, and within that you have here a shoulder one, head, shoulder two with resistance in the head, nice supply and demand zone. So it was a clear trade to take. So I really regretted it or blamed myself that I didn't took it, that I didn't saw that fib completion. It was a really nice trade for potentially going back to this selling zone where the sellers can kick in from that upcoming week, that new week, next week. So 3 out of 4, the fib was triggered, the supply and demand zone here, and the trend is bullish. Only the candle close was against us, so 3 out of 4. Then on that 4 hour, I can see we have a deceleration. We have 1, 2, 3, 4. We could take the trade to the upside, and yeah, it was a good trade. 2.5% running. I will close 2.5% there. Then the next one, EURGBP, this was then again, this was a hedge or a scaling. Yeah, this was the scaling, the second scaling. This was the first bullish M scaling, and then the second one, the clear one with the clear breaks. First leg, second leg, third leg, fourth leg, going back to this 4 hour higher low. If you rounded it off, you were in this trade, and 2.5% was running there. Stop loss below this wicks, and you had a nice trade. Then GBUSD, this was then the hedge. So we were first in that retrace, that bullish M fake out, sorry, or you could also see it as a pullback trade. That first one is bullish, this long setup, and then you could trade then the hedge, the short, because you were already winning in a long, so you can take that in your advantage and you can potentially make then a shoulder one here, head, shoulder two, where we have a nice bearish W fake out. So we have a close below this, above these highs, but not above these wicks. So it was clear. And I can see with a fake out, a bearish W fake out, we like to make to come back to the shoulder one here, head, shoulder two, where we can also then buy afterwards. So I was looking for a short on the weekly. I will open the weekly. and the 4 hour also. So on the weekly, we had a nice 2 out of 4. Some people will not see this as a 2 out of 4, but I saw this as a shoulder one, head, shoulder two, nice supply and demand zone, acting as support, support, resistance, support when we are above it, when we are below it as resistance. So this is the clear supply and demand zone that could act as resistance again with that impulse, potential correction impulse. And the candle closed this one. I was counting for me because it was closing more bearish than bullish with the 10 shoulders, so I count 2 out of 4. And on the 4 hour, you could see we made the deceleration. After we made that fake out, the deceleration was made. Stop loss above this 4 hour high wicks. I guess it was 10 pips, yes. And then we could take fully partials at the shoulder one, which was laying around 2.5%. So this was a good trade. Then we have Euro USD on the daily, weekly, and 4 hours. So this was also still 2.5% trade. So this trade I had some major conversations about. If I go over the daily, on the daily, it was clear for me that we could potentially make here a pullback trade. We had here our bearish W. We had a first time break here. So we want to see a selling zone. We have here a selling zone here, also from this zone. We have also some buyers. So this is the major liquidity zone. And we grabbed that liquidity and we went to the downside. So I was looking to that pullback trade first time break because we broke this previous higher low wick. We broke it here. We touched that supply and demand zone selling zone to come potentially make that shoulder one, head, shoulder two, which we reject on from this IC here, this blue candle between all the red candles, which is an IC. And then on that weekly, for me on the weekly, we have a 2 out of 4 for that short. I put my horizontal line at this daily zone and I saw we had clear sellers here, sellers support, sellers support, sellers support, support week when we are above it, resistance week when we are below it, resistance week, resistance week. So this was a clear supply and demand zone for me that could hold the price down. So the supply and demand zone and the candle closed this red candle was still working for you for going to the downside. So a 2 out of 4. And on the 4 hour, then we had a bearish W with break of structure. I wasn't here focused on that IC. I was, yeah, because this is a red candle, you don't see it that clearly, but then you can see here first leg, second leg, third leg, and we are closing below this higher low wick. So this is a first time break. Then we make a shoulder one. So this is then the shoulder one, head, shoulder two. After that, we made the bearish W. So this is a bearish W with break of structure. So I was looking still to that pattern in a pattern. And I was so afraid of this trade that I didn't took it because I could also take it here. And I could my stop loss set here around here, 10 pips, something like that. But 5 pips above this previous lower high was also fine. And this could be a potential loss because the stop loss was so small. This could be potential, but I placed it as a winner. So on this trade, I had some major conversation that I was in a losing streak, and yeah, it was really a small pattern, and we could go and make liquidity weeks to back again this zone, and we didn't do that. So these were major conversations that were came up to my head, and yeah, this was forcing me to not take the trade, and it played out till the daily I see here where we rejected from again. So yeah, this was the trade. You could take your 2.5% out. Then GBAUD, this was done again because we had here, I was explaining here the deceleration here, the retrace. Then we had here that bearish W fake out deceleration, and then we could trade that daily shoulder one, head, shoulder two. We had a fib completion from a fib completion. Actually, the fib from this high to this low, you have a minus 60, 80 here. So you could take your limit, stop loss below this shoulder one wicks, and then this trade could go already on break even and it's still running. If I go over the daily, then this trade is more clear This is then a shoulder one, head, shoulder two. You could see you could take it 3 trades in just only 1 week. How nice is that? Just on one pair, 3 trades. Just an trade with a trend here, impulse, then a hedge potentially against the trend or potentially a continuation, then the reversal shoulder one, head shoulder two is also playing out. So you could gain some really nice trades from that pair or some really nice moves if you always closed 2.5%, something like that, then it would be a nice trade. Then the last one, GPY, this was a daily inversion and shoulders. Yes. So what was the mistake I made here? So I will open a daily, weekly, and 4 hour. This is actually the last trade I will go over. So on the daily, what my mistake was that I didn't place my fib from this low till this high, and I was too focused on this shoulder one, head, shoulder two, within that a bullish M. So pattern within a pattern. So I was too focused on that it would come back in a correction in a potential one, two, three, four, fifth leg formation, then going to the upside. But it didn't do that because we grabbed here that liquidity from that fib. The 61.80 was tapped. So that's the reason we had that impulse. It was a shift. We had an impulse. And then we received that shoulder one, nice wicks here holding the price up, the head, shoulder two, and we went to the upside. So this was a mistake I made that I didn't drew there the fib and was looking to that inversion shoulders, aligning with that weekly highs here. So good trade actually. If I go over the weekly, you can see it's 2 out of 4. For me, the candle close is a doji, but if you saw this supply and demand zone, this can be also a one for you, a potential 3 out of 4. So the trend is also for me. First leg, second leg, third leg here, potential same highs, same lows. Okay, we are still bullish because this is also our major bullish M here trend going to the upside. Also this smaller bullish M here holding the price up from this liquidity zone going to the upside. So the trend is bullish. Then the supply and demand zone, this was clear resistance and this was acting as a support with closing. So for me, this was clearly a 2 out of 4, potentially a 3 out of 4. And the fib from this low to this high could play against you. So I was saying that this one was working against me. And then on the 4 hour, you could see you had a deceleration. You had here the 3 candles here forming, and then one in between. And then this is still valid. The fourth one was trigger 10. So I was analyzing this trade also, and I found that this was also an impulse that potentially was already played out, but actually it's not the clearest impulse. So this trade was still valid. And yeah, I just needed to take the trade. So this was my weekly review. A lot of trades could be taken, a lot of gains, but a lot of conversations were in the way. So yeah, just feedback for upcoming weeks and months. So I hope you liked it and see you next week. Bye.